All right, everyone, this week on your Mortgage Minute, I want to bring in a different perspective. We're going to talk a little bit about the word on wealth, because your mortgage is tied to your wealth. So I've brought in Mary Lyons, the wealth woman, and you just got an award, the Ring of Honor, which means in your big national broker-dealer, you are in the top 10 advisors in the country. Congratulations.
Thank you very much.
So I can't think of anyone better to talk to you guys about this than Miss Mary Lyons. So here's the question we get a lot, especially right now with rates where they are. Is it better for someone to pay off their mortgage just as quickly as possible, dump all their extra cash to that, or to leverage it?
I think it depends, but I will tell you that I think having liquidity is always a really good thing. If you have the ability to get a 30-year mortgage rather than a 15-year mortgage, you can invest the difference of the payment if you want to. And what that does for you is it builds up a liquid pool of cash. So if you were to lose a job at some point in time, you'd have cash on the side that you could use to continue paying your mortgage. Whereas had you been paying more aggressively on the mortgage, you might not have the cash to sustain the mortgage payment during a time of unemployment. In addition to that, if you are investing the difference in the payment, you get to take advantage of compound interest, which Einstein called the eighth wonder of the world.
Well, I guess, he was kind of smart.
Yeah. So if you are taking advantage of compound interest, depending on how much you're able to earn, there is always the possibility that you might earn enough to pay off the mortgage in 15 years anyways, or perhaps even sooner.
Wow. So why do you think why do you think we believe that you have to pay off that 15-year as quickly as possible?
Well, if you're looking
or you have to do a 15-year.
Yeah, if you're looking at it on one dimension and the only thing that you're measuring is the amount of interest that you're paying, you are going to pay more interest on a 30-year mortgage.
True.
But the more interest you pay, potentially the more you have in tax deductions as well. And if you are investing the difference of the payment and taking advantage of that compound growth curve, then you do have the ability to end up with more.
I love that. Okay, so the bottom line is, in summary here, if I'm getting this right, paying off your mortgage fast is not a bad idea if you're measuring it on that. However, there are opportunities, especially in today's environment, for you to leverage that, keep your money liquid for opportunity or protection, like job loss, so that you can keep that moving and you control the wealth you create versus the bank that owns the mortgage, right?
Absolutely, you got it.
I love that. Well, thank you. Mary Lyons, the wealth woman. I can't think of anyone to give you better advice, so call her. She's amazing. Thank you so much for watching this week. We'll see you next week on The American Dream.